Good morning, everybody. Welcome to 21 Million. I think my music might be a little too loud. Listen to Candlebox. I'm always listening to 90s music. 21 Million. My name is Pete. Please like and subscribe to my channel right now. And as you can see right below me, follow me on Twitter, Instagram. I'm not as active on Instagram and TikTok, to be honest with you, as I probably should be. But Twitter I am. So you could definitely reach out to me there. So today we have, is it this way? This way. We have Turf War, Bears versus Bulls. And there's some crazy news going on right now in the world. Not crazy news going on in the world. There's highly anticipated things going on in the next 2 weeks. One of them starts today. So something we need to keep into consideration is Powell is testifying to Congress this morning. It starts at 10 a.m. It's 2 days long. So it's going to be today and tomorrow. That could, who knows? I think he's smart. Obviously, he's smart enough to know they don't want to tank the market. And he's going to be very careful on how he speaks, I would imagine. But he could totally come out and say something. Absolutely. Oh, I got to plug my phone in. It's going to die. He can totally come out and say something outrageous, and it can completely, change the market. Sorry, I'm adjusting everything right now live. So something to keep in consideration, and that starts in just about an hour. It's 9:02 Eastern Time. He starts at 10 a.m. Eastern Time. Another thing in the next week or so that we have to watch is the February CPI, Consumer Price Index. So that's coming out. I pulled that up for us. Let me zoom in so you can actually see what the hell I'm doing here. So this is the schedule, and these are the dates we're going to have to watch out for. But if that, last time we had, so that came out on... So January's came out on March 14th. Not March 14th. We're in March. February 14th. Came out on Valentine's Day. So I'm just going to take a look at my chart quick. And that was on the 14th. So on that day, we actually had price action moving up. And I remember it was kind of a little weird. They thought the rate was the inflation was going to come down lower than it was. It came down, but not as much as they thought it was going to be, and it was kind of not really bullish news. But I guess the market interpreted it as bullish, and we actually had 2 days of movement up. It actually went up a considerable amount. Leading up to it, the day before, on the 13th, on that Monday, price was at 21.7. Okay, and then by the 15th, it had gone as high as 24.3. So it had a big run. It had a significant run in those 2 days. So something to keep a look at. But as much as that goes up, it can also come down. So he could say something totally outrageous. Not outrageous. He could say that instead of going up 25 bips, it's going to go 50. And then... today, when he testifies on Congress, he could say something that we have to be more aggressive with the inflation, and that's going to be super bearish, and the market's going to not react well to something like that. And in the same way, he could say that, what we're doing is working according to plan, and this is exactly how we wanted it to go, and then, that we wanted this soft landing, and that it's going perfect. And it could be super bullish. So the next 2 days, the market's going to be a little weird. I got out of a bigger position that I had. I was actually holding a big position of ApeCoin, and I was staking. They're giving good yield. It's apestake.io, and this is not financial advice. You guys do your own research and do your own thing. I'm just telling you what I was doing. The big APR, I was compounding it, so my APY was through the roof. I know they're coming out with a token release on the 15th, I think, of this month. And for some reason, I'm super skeptical about the market right now. It's a little weird, even though I'm a parable. I don't know. It's a little weird. When we get to the charts, I'll show you what I'm looking at. Hold on, I gotta put it a little closer too. Sorry, guys, doing some adjustments. So I got out of that position this morning. So I'm a little cashed up, I'm a little liquid, and we'll see where the market goes. Let's take a look. So today, 10 o'clock, we're looking out for Powell with his testimony. And then next week on the 14th of March, we are looking for the CPI. That comes out at 8:30 in the morning. It's going to come up before the market opens, the stock market. So, everyone says that the market's separated. They're not. If Powell comes out today and says something crazy, and stock market crashes, be certain the crypto market's going to follow it, be right behind it. So let's take a look at the Foo Fighters. Cool. So let's take a look at CoinMarketCap. And guys, please just take a second, like the video, subscribe. Throw a comment if you're watching live. I don't have my chat up. I got to get my chat up. Throw a comment. Any engagement really helps. So let's see. So we have the market caps at over $1 trillion still. We have 24-hour volumes at 34 billion. Bitcoin dominance at 42.4%. ETH dominance at 18.8%. This has pretty much been the story. It's pretty much been the story. The volume's up a little bit since we broadcasted on Sunday. I think it dipped down on Sunday into the 20s. So it's up a little bit, which, don't forget, if the volume goes up, it doesn't mean the price is going to go up. I mean, it could very well mean the price is going down. So that it's going sideways right now while the price is down, it's actually makes me feel a little bit better. So it's so funny. Powell can come out today and just say something so stupid. Anything bullish. Everyone's looking for bullish news. Something. Anything could be misinterpreted, and this market can bottle up and pop. The stock market to me looks bullish, but we'll get to that soon. Let's take a look. Bitcoin's at 22,365. Sorry. We have ETH dominance. Everything's pretty red. Not much. Everything's been going sideways. Obviously, if you're watching Bitcoin, it's been going sideways since Friday, since that crash. Crash, correction, dip, whatever you guys want to call it. You call it a crash, everyone's like, oh, it's not a crash. Shut up. So ETH at 1563, BNB's at 285.99, 286.07. Look at that. We have XRPs at 37 cents, Cardano's at 32 cents. These have separated a bit. Polygon's at $1.14. We have the Dogecoins at 7 cents, and Solana's at $20. Polkadot's at $5.81. Litecoin's at $85. Don't forget the halvening for Litecoin is coming up this July, I believe. We have, and last time it ran up, the halvening had an effect on Litecoin last time. And also something to keep in mind, Litecoin is not it gets mined. So I know Powell says Bitcoin's the only thing that's not a security, but Litecoin is the same thing. So, or it's not the same thing, but similar. And that would also include, I guess, Doge, right? Because Doge would be mined. It can't be a security then, right? So Tron's at 6 cents. And like I've been saying, Tron was did not have the biggest downside during the bear market. So let's take a look at the Fear and Greed Index. 49, neutral. Like I've been saying, it's pointing almost straight up. We have, I'm figuring we might dip down into a little fearish before going to greed. But something just to keep an eye on. Let's take a look at the gainers and losers. So 24 hours, nothing significant crypto-wise. Obviously, the stock market went up 7%. People would be cheering from the roofs. But for us crypto degenerates, this is nothing. Same thing on the downside. Nothing crazy. 10% from synthetics, almost 9% from stacks. Conflux is 6%. Nothing outrageous. Let's just take a look at the 7-day quick. Yeah, same thing. Well, the downside's a little bit more. We have, I never heard of it, Clayton at 20, down 25% almost. Stacks down 22%. Seems to be trending down. So we got some things there. But let's take a look at the trading view. All right, guys, so just keep in mind, it's not financial advice. Just my knowledge, interpretation, and I just like crypto. So let's talk about it. So this is, we're on the Bitcoin index. We're taking a look at our halvening map that I have created. So we have this yellow line would be, so like I've been explaining. So we had this peak that hit off the golden pocket from the previous, set by the previous all-time high. We hit our head on it over here. It's about 13,000. So from the bottom to the top here is the same time frame from the bottom here to this. That's the same time frame. And it also would be the same time frame from the top here in June of 2019 to the actual halvening. So we're coming up to about a year from the halvening. The halvening is going to be April 24th, and the hash rate is going through the roof. I would imagine this might creep up a little bit sooner. I'm figuring beginning of May, April, but we will see how that shakes out. But we're about a year away now, 10 months, a little less than 10 months. And like I've been saying, I got the end of the bull market right over here. So from the beginning, 75 weeks, front and back. This is the halvening. Back 75, forward 75. Puts us at the peak at October of 2025. But could be a little bit different. Let's go back one more. It did peak out, right? 75 weeks. It's pretty accurate. But let's see. And it ran up, even after that crash, it still ran up set a new all-time high in that area, that 75 weeks. So I would imagine sometime in this area, after the halvening. So let's take a look here. How many weeks is it after the halvening until you would show a profit? If this was the bottom, you'd have to, you'd want to show a profit. So you'd have to wait. A decent profit. One thing over here was 40,000. If you sold the 40,000 and you bought back in, you'd be happy. At somewhere around 20 or now. So you'd wait 38 weeks. And to the peak, the first peak, 48 weeks. That's interesting. That's from the halvening. So after the halving, if you start dollar costing averaging out, this is all not lost, but it hasn't come down back to that to be justified. So you'd really have to wait after the halvening to really start dollar cost averaging out somewhere. Honestly, around the year. That's if we have this V-shaped. It could not V-shape. So a year after the halvening in 2025, I guess April of 2025, you got to start really pulling out. You should, or dollar cost averaging out instead of in. But, everyone, you make your own rules, how you're going to get in and out of these positions. So let's take a look at total market cap. Okay. I could probably make the 4-year halvening would probably fit. I mean, they look pretty damn similar. You know, I mean, if I flick back and forth, the altcoins probably didn't do as much damage as Bitcoin did. Bitcoin had a bigger percentage up, it looks like, on that first run. The second run seems like it's similar. It's interesting. The halvening chart probably works with this. So I want to turn on, when I look at this, I want to look at the moving averages. So we have the 250. The blue is 50 and the red is the 200. Okay. This is the 200 weekly moving average. So it looks like we hit our head almost on that 50, came back down. I mean, right now we're under it. There must be a trend line somewhere in this area, right? Something like that. Right, ladies and gentlemen, right, we got a couple touch points. 1, 2, 3, 4, 5. So, I mean, could it come down a little bit more? I don't know. Right now it's at 982. But the thing I'm curious is that we have the total market cap at 983 right now on here, 983 billion. But on CoinMarketCap, we have it over $1 trillion. And then, you know what we're going to do? We're going to do a little investigating. Let's take a look. So we have CoinMarketCap's at over $1 trillion. And then let's look at CoinGecko. Okay, here's another site that's similar to CoinMarketCap, and I know that the market cap is different between the two. So we got $1 trillion, 19 billion, and we have 1,067 billion. So for me, I don't know how they come up with the 983. Doesn't really make sense to me, but yeah, I don't understand what's not being accounted for. It could very well be more accurate, the one from TradingView, but I'm just not sure how it works. If you know, drop it in the comments. Very curious. But let's take a look at the total market cap. Let's take a look at some of the indicators. So we have, which looks pretty bearish. I mean, just eyeballing it. We have, like you guys should be learning now. We have the, we're in the red, right? Money flow is coming down. This is something that's important. Why can you see so much of my TV? I feel like I have to change this. You know what it is, guys? I set this up right before I come on. I should just leave this bar where it is. I always put it back and hide it. But I'm just I gotta set it up and just leave it. But we have here, we're in the red, right? So it's bad money. The VWAP is coming down. This is the weekly now, okay? VWAP is coming down. Not very bullish. Some things that we could say. I mean, could we see something like maybe a head and shoulder? Maybe we come down, get a little something like this, and we come up. I mean, that would be nice. But right now, it doesn't really look too bullish to me. Let's go back to the money flow back in March the beginning of the year in 2019. Okay, because that's kind of comparable in the bull cycle as we are now. So we had a green dot. We got the big green dot with signal a bottom. And we actually had momentum getting bigger before it came up. That's interesting. It did break here, and we have a red dot. I mean, we're still on the upside, so maybe it stays higher and moves up. It's possible. Let's take a look at the RSI. Nothing really that crazy. We're above the moving average. which, they're probably going to touch somewhere, maybe around the 50, somewhere in this area. So it does look like the RSI might come down a little bit, price come down a little bit. Do we have any? I don't think we really have any divergences that I see. But let's take a look at the daily now and take a look at the daily moving averages. Let's see if there's any bullish news. Maybe this bleeds up, maybe the smaller time frames start to bleed into the higher time frames. Let's do 3 day, because the 3 day is usually bullish on Bitcoin. So we have, so we have the VWAP coming down. Hopefully that starts to bow in. We're in the green on the 3 day. We're under the moving average, so that's pretty cool. So maybe this comes down and we come back up, or drags it down a little bit closer to the 50. Not too bad. Looks like we're finding support on the 3 day 50 moving average. So maybe a double bounce here. We start to, project up. So that's pretty bullish. Let's take a look at the daily. I'm looking for positive things right now, guys, as you can tell. So it looks like we're on. Wow, we're pretty damn close. Let's zoom in pretty good. Okay, so on the daily now, so we had a hard bounce off of the 50 and then found support and went up. That was in January probably. Yeah, February 23. No, February. Oh, this is January over here, the big movement up. Okay, so here, I'm forgetting on the daily. Bounce, price action up. This is February 14th, so this is what we were saying before about Powell. The CPI, rather, came out. This is the 13th, the 14th, it came out. Then we had everything moved up off of the news, which wasn't really that bullish. So that's the effect that, today with Powell speaking could have, and that's also the effect that we can see on the 14th of this month when the February CPI comes out. So it looks like we're banging off of the 200 daily moving average, and we're stuck in between because we're also not breaking through the 50. So we're kind of like right in between. Looks under $1 trillion, but we're banging in between here. So I think today, I wonder what happens today, what he says and how he speaks and how it affects the market. It should be interesting. But let's take a look back now. So on Sunday, I was talking about the broadening wedges. On the market cap, I'm not going to go any further down than the daily. We're not going to start making trades, micro based on that. So let's take a look at this broadening wedge, which is still in effect until it breaks this trend line right here. Okay. And this is just an idea to how this could play out. So the second touch would be the top from the base of the wedge to where that meets. This arrow and this arrow are the same, and this would be our target, would be 30,000, which has potential. Okay? I went straight to the daily. I'm wild today, guys. We're going to switch over to the weekly just for a moment. I got to get into the habit of going in order properly. So ultimately on the weekly, this is the wedge that I'm really concerned about. We have this one. It's 2 yellow lines. This would be our trend. This is the biggest concern. This is the most likely to play out, in my opinion, which isn't bearish, it's bullish. Eventually we're going to have a breakout. It has potential. Okay, I'm not saying this is the most likely. It has potential. Okay, so if everything were to break today, if it were to go down, he says negative things, we could see this gap get filled. Okay, the 19.5-ish to 21,000, this could get filled. We can go down, we can have a wick below the trend line here. It's possible. It's possible. It could happen. There's also another trend line right here, which you know, this could be, that could be it. You know, maybe we come down and hit this. And that's the one that I've been looking at, I think, on the daily. This is probably similar to the one on the daily. But when we get to the daily, I'll find that. Okay, so that's possible. And two things to keep in consideration also are, above us, we have these gaps that haven't been filled. Okay, so the gaps on the CME, so I'm switching over now that we're looking at, wrong one. We're on the Bitcoin CME futures right now. Okay, these are the gaps. And how the gaps work is, so this is what I just turned on is the imbalance detector by LuxAlgo. So what they have here is, these are the gaps right here. So when price action closes on a weekend, a Friday closes, and then it opens up on a Monday with Bitcoin, because Bitcoin trades all weekend. When it opens up higher, it creates an opening gap. Okay, so same thing you see here. This is a bearish gap because it went down over the weekend. Bullish gap went up over the weekend. Okay, so the bearish gaps, okay, because it goes down, they close at a higher rate. It's 84%. Okay, which over time we've closed 100%. 100% of the time it's been closed, because every time we've had a bull market, we've went up and closed that gap. The bullish gaps don't always close at a lower rate. It's 74%. Okay, so we have one here that's directly below us right now that we could potentially close. Okay, which would bring us down to 19.5. It's possible. But so you see another one here, and it eventually was closed. This one here eventually was closed. You know, you could tell this is a key spot. We blew through it, and then over here was a sharp movement down. So, but if we go back now, not to freak everybody out, but there's gaps that haven't been filled. Okay, so we have a gap here, the week after October 20th. Okay, it was a bullish gap. Okay, this was during the bull market. This is when we were going up, you know, the big movements, obviously. So we had the breakout of 11,000 to approximately 11.3. This gap here, small gap. There's another one here. These have not been filled. It's at 98, 9,600 and 9,900, about almost 10,000. Small gap. So these haven't been filled either. But, you know, we went like this. We started moving up. I mean, we were above it. This is the weekly. So, we were pretty close for a couple of weeks, and we just kept on moving up. So I know this is a little bit more concerning because we're kind of hovering in this area. It's really weird. We're hovering below the 200, the 50. We're getting rejected, and we're like trading above this gap. So I wish if it was going to do it, just do it and get it over with. You know, pull the Band-Aid off. Let's roll. So, yeah. Anyway, let's go back to the regular Bitcoin. This is the on Coinbase. Okay. So we did the weekly, the gaps that are really close to us. Let's go down to the 3-day. So 3-day, like I've been saying, that broadening wedge that we have. But the 3-day is a little more bullish. We have the money flow in the green. You know, right now it'd be nice if we had a higher high, a higher low, rather, and then put us into a higher high. And it's so crazy because if you go to the 4-day, not as bullish. The VWAP's pointing down now. I mean, it's possible. I mean, it seems like, I mean, it would make sense that it would come down. And then maybe we need a higher high, a higher low, and then a higher high to not have that same thing I was saying before about the head and shoulders. You don't want something like this and then to come down. So we really want something. We want a higher low and then a higher high. That'd be nice. And then hopefully we can start getting flush. But you really only see that, you know, on the 5-day. It's not the 5-day. I'm still bullish on this too. It's starting to cut in. Okay, I mean it's cutting in. Hopefully we can, cut in good. VWAP's pointing down. Maybe we have one little thing and bang out of there. That'd be nice. I don't look at the 5-day often. Yeah, so we're starting to cut in. Are there any that look similar? No. Yeah, maybe this is a nice little head and shoulder. Bang out of here. That'd be cool. What else do we have? All right, let's go back down. Let's go to the daily. So daily, I always get drawn to the money flow first. Hopefully we're already printing a lower low on the money flow. It'd be nice if we moved up. We want to stay flush. We're coming down here towards the bottom. Around this area right here, whatever that is, 60, is when you start to see those green dots get printed. On the daily, what I've noticed also, and tell me if I'm crazy. So this is the part that gets a little weird for me. So we have a trend moving up. We have a bearish divergence, a bullish divergence. So what gets me a little nervous about this is that in order for this to be nullified, the price would have to go lower or meet the 21.5 mark. Okay, so it would have to come down, and then they would both be pointing down or sideways, and one's down, one's sideways. Okay, right now we have price action with a higher low, and we have the RSI with a lower low. So this would have to come down to 21.5 or lower for this to be nullified, that they would both be lower lows. Okay, so that's potential. It's potential. It has potential. It's got legs. So I wanted to take a look at something here. If this matched up anywhere. This was the trend that I saw before. I mean, could this be somewhat of a trend? Maybe these over here hit a couple times, but down below, found support on it, bounced up. Maybe we hit it again. Maybe this isn't the trend line. Maybe this is the trend line. I mean, it's potential. Got tons of touch points. And that would put us down to that 21.5 mark. It actually could put us below. No, it'd be in that area. It's possible. Maybe we do. We wick below, and nullifies that bullish divergence. You know what, though? Let's keep this up here. Let me lock it. Let's make it a different color. We got a lot going on here, guys. Actually, you know what? We're going to get a little wily. We're going to switch over to... So this is actually... What colors do I have on that? Sorry, guys. I'm bouncing around on you a lot. So this is my my Bybit. I do a lot of trading on Bybit. So let's make this... Let's make it all uniform. Make this yellow. We'll lock this in. It's locked. Locked. This one's unlocked. Let's lock it up. And then let's make a new trend line. Something to keep into consideration. So here we got 1, 2 checkpoints, 3, 4. And then we have a few over here. We'll make it hype. I wish there was more color options. I don't know why I just hate the colors. I wish yeah, we'll make it blue. Just want to lock it. All right. So the blue line, potential. It's got potential, right? And we can even go like this. No, I had it right the first time. This is probably... I'm going to go off of that line. Yes, we'd have 1, 2, 3, 4 touch points. 5, 6, 7. No closes, right? There's no closes below that. Yeah, right here, look. Bounce, bounce, bounce. And then maybe we got to hit that again. Seems interesting, right? It's a thought. And I have something similar over here with this red one. I don't know. We're going to find that, I guess, right? Let's go back to Coinbase. I wonder where any of these fib levels match up from the bottom to the top here. Let's look for golden pockets today. So the golden pocket puts us under. It puts us under the gap. I don't see us going under the gap, guys. So let's go a little bit more local. Let's go here. Oh, look at that. We're actually we're at the pocket, which we'd actually be finding support on the golden pocket right now. That'd be pretty interesting, right? And you can see we had a sharp movement through it, sharp movement up and out of it. So that's pretty interesting. Let's tighten it up a little bit. So this is an interesting spot. So we'd be inside of it now, finding either support or definitely checking that. That's a key level, huh? It's bouncing around it right now. It's inside of it. If we were to break out of it down, but look how hard that wick is. Bang, bang. And look, that's right on the same as the trend line. Today, tomorrow. That's interesting, right? It's a little bullish, I guess. I'll take that as bullish news. It's one for the bulls. So if we were to break out of that, if this were what we're looking for, we'd be testing 21.5 would be the next level down, right? 21.577, that'd be the 786. And right now it's trapped between the 65 and the 618 right here. So that's interesting. Yeah, that's super interesting, right? It's got potential. It's got legs. Let's go down to the. Let's take a look at the 8 hour. No, I'm gonna go down to the 4 hour. Actually, we're gonna do 4 hour buy bit. So I had this trend, as you guys remember from Saturday, that I felt today actually broke out of. So actually I got out of my position. I had a stop loss at 21.6 down. I wanted to break this trend, and I thought I'd be over. I had a long, but I'm a little uncertain with the market. To be quite honest with you, to have any positions, it's such a coin toss right now. You got to be very careful. 4 hour. There's not much. We got a bear pennant, likely to break down. So the breakdown really, and we're out of it right now. And if you go down to the even smaller time frames, like a 30-minute, with that wedge that I had, it sure does look like. So it just went down. So in the last 30 minutes since we've been talking, right? We've been on for 40 minutes. So right here we have 22,192. It's gone down to, and it's wicking up, but one says wicked will candlestick. So, and it looks like, to me, it looks like it broke down out of it, went down, got rejected. My trend line could be a little off, rejected, and now we're going to start seeing some lows. But you know what, though? Powell can say something crazy right now and spin this circus around. So, but he comes on in 20 minutes, and I will try to wrap up by then so everybody can see what the hell he's saying. Okay, so something else to look at. Bullish news. Let's take a look at around the stock market. Let's look at Dixie. So the dollar, it looks like I'm on the 30-minute. Let's go to the daily. So dollar's up today. Actually, as we speak, it's running. So that's good. I'm sure that's good for business. So we want the dollar to come down. So we had a break out of the wedge. We had a test, and then ultimately I think it's going to come down. The red line here is about 100. Seems to be a nice support level that it's had. It broke through, hopefully, and we can get back down to around $100 or less. We want that to come down. I'm surprised it's moving up. It's running a little bit. S&P, so it's going to work the opposite. So obviously the S&P is kind of looks like it's rounding off on the daily. It bounced off the trend line that was set from back in beginning of at the end of 2021, beginning of 2022. It's been trending down. So as we know, it's a falling wedge. It's going to break out, broke out. It's confirming, and hopefully this starts to move upward. Would be good for the market. Something else to keep an eye on, we have the 10-year bond rates. So we want the bond rates, the rate to come down. That would mean in the raising of the rates. So when the bond rates are high, that means that inflation's high, and that means that we're in a recession. So the rates are high right now. And I've been saying that forever, that we're in a recession already. We're not going into one. We're in one already. The S&P's down, how much? From 4,800, it bounced down as low as 3,400. So we saw a correction in the stock market, S&P at least, of almost 27%. So, that's recession. It's a big move down. So we want the rates to come down, and that's what we saw on Friday. On Friday, we saw that big move to the downside, and that's what had spurred that initial upward movement of the S&P and the stock market. So you want to see it kind of break the support level of that the 236. If the Fibonacci, I guess we're applying Fibonacci to interest rates. But yeah, it's possible. Could come down. Then hopefully we start to trend in the opposite direction. That would be nice. Be good to see that. So something to keep an eye on. And it looks like money flow. I don't know how money flow works with. So what was the low? So when we were, let's look here. Let's go to the S&P. On the daily. Let's go to S&P on the weekly. It'll be easier to read. Okay, so we have a peak in January of 2022. It was at $3,800. Okay, so let's look January of 2022 on the 10-year bond. Did I say January 2022, right? Here you go. So the rate was 1.5, but it was trending up. Okay, and we had a low in 2020, March of 2020. Well, obviously, that was the bad times. Let's zoom out a little bit more. No, that was the peak. Yeah, no, so 1.5%, so it's as high. So the 10-year bonds now is almost triple. So it's as high as 4.3, and right now we're at 4.9. So now we need this to come down. Then we need a lower low. A lower low, and then now we're going to start trending downwards. And then hopefully the 10-year yield for bonds bleeds into the 5-year, bleeds down to the 3-year, the 2-year, the 6-month, and we could start. This inflation thing starts to come down. And then when this comes down, the markets are going to pump. But it looks like it's going up. The dollar's going up today at least. So should be interesting how this plays out. But anyway, guys, I appreciate you listening. Make sure you like and subscribe. And I will see you guys tomorrow at 9 a.m.